Hi everyone, it's Nachman here from ConnectBooks, and this week we're going to discuss our weekly tips. As you know, we keep on adding on new features every week. A lot of customers don't always know what the new features are adding on. That's where we created the weekly tips to let our customers know about the new features that we keep on adding on. So this week my question is, how do you account for the inventory that gets damaged or lost or broken in your local warehouse? So it's very important at the end of the year, or at least once a quarter, to reconcile your inventory. I've seen many companies on the balance sheet can show, let's say, $2 million worth of inventory, and at the end of the day, it's only 1.8. There's additional $200,000 in inventory that is really garbage that should be taken off your profit and loss. And why should you be paying taxes on profits? Meaning to say, if your inventory is overstated with $200,000, that means you have more additional $200,000 in profit. Why should you be paying taxes on that money? So, in order to reconcile properly, what we need to do is go to your local warehouse, get an inventory account. You could go to ConnectBooks and go to the inventory report and select the year end to pull your inventory account, how much you had in FBA at year end. Combine the two together, and then go to your Quickbooks and start to reconcile it and match it up. However, a lot of people complain that that is something really hard to do because, they're not counting FBA the same time they're counting FBM, and they also want to reconcile FBM more often. They don't always be tied together to reconcile the local warehouse the same time that you have to reconcile FBA. So we added on a feature where we separate the orders. We separate FBA and FBM. That means to say when the settlement syncs from ConnectBooks to QuickBooks, we can insert the FBA orders into one warehouse and the FBM orders goes into a different warehouse. We also added a feature to separate orders and returns. So let's say you want to keep track of all your returns, we can put that into a separate warehouse as well. So you can set up multiple warehouses, meaning you can have like a local warehouse for orders and a local warehouse for returns. And eventually, you can know that, let's say, all the returns come back from, let's say, FBM, you put it to a particular place, and then when it comes in from ConnectBooks, we put it into the return warehouse. So at least it doesn't go back into your regular stock. You know that is different. So to enable this feature, what you do is you would go to track FBA versus FBM, you would select yes, and then over here will pop out all these other warehouses. So you would go to the drop down here and select it once your QuickBooks is synced. Now, just to mention, you're going to need QuickBooks Enterprise. Multiple warehouses is only available QuickBooks Desktop, only desktop, and it has to be the multiple warehouse. You need to have it, the multiple warehouse you have to enable. It's only on the Enterprise Edition. So when you go down to the FBA warehouse, you will have an option to select the regular FBA warehouse, and this is for the FBM orders. Then your refunds, you would select you can select either the same warehouse if you want to keep everything together, or if you want to have it as a different warehouse, you select which warehouse you want to have the refunds, and the same is over here. The adjustment warehouse and replacements, those are for adjustments. Let's say, for example, let me give it an example. Let's say you have 1,000 pieces going into Amazon. All of a sudden, you lost those 1,000 pieces. It's stuck on inbound. So Amazon's opening a case now, or stuff like that. So what you can do is, instead of just deleting that that product off your books, because what happens is that when Amazon is going to decide to reimburse you those 1,000 items, you're going to need we're going to bring it in from ConnectBooks as a reimbursement that you sold these 1,000 products to Amazon, and we're going to take 1,000 pieces out of inventory and say, okay, 1,000 pieces go out of inventory and you got, let's say, $1,000 for it. But the question is, till that reimbursement comes, you don't want this inventory on in your warehouse because it's confusing the numbers. It's showing that you have stock or you don't have stock. So in that case, you can take that inventory and transfer it to a different warehouse, which you can call the FBA adjustment warehouse. And then when the adjustment comes in, we take it out of that warehouse. So we have the option, to put it there. And this is also for replacements if you want to keep track of replacements when Amazon sends out replacement. So let's say you can put the replacements together with the refunds, because the replacement usually refunds, that customers would need to send back. So they should cancel out at some time. So to summarize this concept is that we're giving you the option to separate the FBA orders into different warehouses from the FBM orders. So that's how you can keep track of what's going on in your local warehouse versus what's going on in Amazon. QuickBooks also offers some reporting on this as well. We also, for example, you can see over here you'd go to reports and you go down to inventory, and you should under sales you should have the feature where you can do inventory sales by site. This will help out as well, where you can review reports how much from each product sold FBA or FBM. We also have a feature where we can split up the orders by sub-customers, FBA and FBM. Like you see here, I have one customer called Amazon.com, and then under this I have FBM, and then under this I have FBA. If you need more help setting up the multiple warehouses, feel free to reach out to us and we'll help you set this up. Thank you and have a great day.